Hey everybody, hey traders, happy Monday. This is Chris Pulver here talking about all things stocks, forex, cryptos in the weekly outlook of the first official trading day of 2021. So happy Monday, happy 2021, and we have a lot to discuss today. Just a quick look around the office. This probably doesn't look too different than usual, but missing some bookcases, and you see a bunch of painter's tape on the wall. This office over the next probably 2 to 4 weeks is going through pretty big renovation. So kind of excited about that. Be a little weekend project for me. Time will tell. But I will show that in due time. You are here to talk about the markets, so let's do that. I'm going to go ahead and get myself out of the way. And I thought this is a pretty fitting image, kind of a clean slate. We talked about this in my last weekly outlook last Monday. 2020, I crunched a bunch of numbers at the end of the year, did my year-end review, and overall, pretty happy with 2020. Certainly left some money on the table. Certainly didn't, aggressively participate like I certainly wish I would have. I could have made a ton more money in call options just because everything was pretty easy to trade in the stock world last year. However, going into 2021, I'm approaching it the same way that I always do. I will do my absolute best. I will let the process take care of the profits, and I will set realistic expectations. So I think that it's a clean slate. Whatever you did in 2020 doesn't matter. Good, bad, indifferent doesn't matter. This is a fresh year. It starts right now, the first official trading day. So I'm pretty excited about that. And it's nice to have a little bit of a holiday reset button, get some decompression in, and get ready to grind it out for 2021. So this weekly outlook is a big one because I will be looking at the US indices. I think where we finished last year, based on what I see technically speaking, also fundamentally speaking, we could be looking at some reasonable and relatively quick corrections. I also look at a lot of transition periods during the markets, certain times a year, and this would be one of them. So finishing at highs in December and January typically mean that we have some short-term highs and lows that are going to be established in those markets. So let's take a look at the SPY, the Dow Jones, or the DIA, the QQQ, the NASDAQ. Let's see where those are at from last year's highs and see if we have some reasonable corrections. I'm not looking at anything crazy. I'm not calling tops. I'm not looking at bear markets necessarily, but I think a healthy correction and kind of a dose of reality is probably a good thing for the markets, but we will see. Cryptocurrencies. We saw Bitcoin get up to over $30,000 over the holiday break. Again, the B word is starting to get thrown around. I saw this also this morning in my Morning Brew newsletter. The word bubble is getting thrown around for, are the stocks in a bubble? Are cryptocurrencies in a bubble? Well, let's take a look at the technical picture. All right, and also the FX outlook. Finishing up Q4, the dollar was by far and away the weakest currency pair of all the majors, and some pretty interesting technical setups. I actually took a position this morning on the Aussie dollar short. I have some really good. Number one, I was very patient on the Aussie dollar. I did short it around 77.15, which to me is a great spot. I'm already up about 35, 40 pips on that trade. And I'm going to let it run just for a little bit. I'm not looking for anything crazy. I'm looking left on the chart again. We'll get to the technicals and show you where I'm at, but I thought that was a great setup. And again, patience helped. I thought that during the holidays, I've done videos on this. We've talked about this in my trading room. Holiday trading means more of the same. Drifting markets, continuation trends, breakouts that keep going, low volume markets where there's not a lot of opposition. So if we had a weaker dollar, my forecast was the dollar would remain weaker during the holiday season. And we did see that. We saw some higher highs on the euro, euro versus the dollar. We saw some lower lows on the dollar Swiss. We saw some higher highs on the Aussie dollar and New Zealand dollar. We also saw some higher highs out of the pound dollar. And even some fresh lows out of the dollar yen, not as low as what we had back in March. We're around 101.20, but the dollar yen also pushed back down towards that 10300 level. So the dollar in general was very soft to finish up Q4 of 2020. Going into this year, I like to see some of those yearly transitions. Highs in December and January tend to mean some short-term bottoms and tops. Transitions between April and May, if we see some pushes and breakouts, or August, September, those are those transition months where I'm looking for highs and lows to form. So that's the technical outlook. So without further ado, let's do that. Let's get into the charts here before we do. Understand there's risk in trading. Please and always use trade capital only. Whether you're trading stocks, forex, cryptos, any financial instrument, please trade with risk capital. Okay. Let's go into the charts. I want to start off with the SPY, and we'll take a look here. So I will bring up these subgraphs here in a little bit, but I'm mostly interested at first in talking about pivots. In my Keep It Seriously Simple video series, I have one on harmonics and pivots. And one thing I always like to look at first part of the year, end of the year, is pivots. I'm looking at monthly pivots, especially. I'm looking at yearly pivots, which are brand new right now. And I think that it makes sense talking about the technical picture when you have the major US indices finishing at these crazy highs from 2020. So you have this low, we have stretched all the way up here. This is representing the S&P 500, 30% downward movement, 40+% rally to finish 16+% on the year. Now, to me, what am I looking at? I'm looking at a yearly pivot around 323. Now, if that was the S&P 500, that is a yearly pivot around 32.25. Now, there are a couple of spots that I would expect to see some realistic pullbacks towards. Now, look, we might see, and I know that this is one of those scary patterns like we've talked about in my other videos. Let me use a line tool here. So if this was, let's say, a broadening formation, well, that's obviously a very scary formation. If we come back to this previous resistance that became support during the March bottom, is this going to start giving us a bearish pattern and things look pretty awful out there? Or will this be nothing more than, 2020 was a rough year. Financially, we kind of engineered our way out of it. What will this look like? Well, I'm going to look left on the chart. And this high from February of last year, before we went into our COVID spiral, is offering a pretty solid level of past resistance to become support. Now, I would imagine that if we have a healthy correction this year, look, we could have a correction coming back into this February high of last year and also into this yearly pivot to balance out the run from last year. So this low to high run, we balance that out at this yearly pivot. We come back in and test these lows. And we see this as a buying opportunity in 2021 for the markets to potentially make new highs. So a couple of technicals that I'm looking for, first to start off the year, I would like, and again, me wanting something to the technicals, look, I'm not calling a top here, but it would make sense to see some bearishness to start out the year. It would make sense to see perhaps the catalyst could be a changing of administration, right? When and if Joe Biden is officially president January 20th, will that transition be a trigger point for the market to start selling off, even if it's in the next 30 to 60 days, or maybe Biden's first 100 days? I don't know, but that could be what the news and the catalyst becomes to see the stock market sell off a little bit in the first quarter. From the buying opportunities, though, it's like I will still, and again, I'm not interested in calling tops and bottoms, especially when it comes to stocks. But it would make sense to me that we're off the lows on the VIX, so we're starting to see some higher upticks in volatility. We have some technical levels that I'm really interested in. If we have a pullback towards this yearly pivot, let me go ahead and plot a Fibonacci here on my chart, because I have a feeling that somewhere between the 30 and 50% retracement zone, if we take this low to this high, we are looking right around a 30 to 38% window to find previous lows, which we had that structure back in September of 2020 around the election. And then we have our new calculated yearly pivot at 32.27. Again, this is on the S&P 500. So what's cool about this is you're going to see a similar outlook to me with several monthly pivots up for grabs, a yearly pivot that's brand new that would just mark a realistic balancing point for the markets. And again, is there a buying opportunity at the yearly pivot, this window from September's lows, previous resistance to become future support? All these good things could happen. Keep in mind that the market might try to confuse us with some topping patterns. We might see something like this where it sets up a correction, comes down to find this previous low, possibly this yearly pivot, and then sets up something like this. And this might be the type of trade where traders are like, oh, look at that. That's a topping pattern. Look at how good it looks. And here's what you're going to have to be careful of. If it does not break this neckline, we are not going to be bearish. If we do break the neckline, then sure, trade the pattern. So the textbook way to trade it would be if we come down, find this yearly pivot here, test these lows. Let me use some straight lines. That'll probably make it a little bit easier, yeah? So let's say that we come down into this yearly pivot right here. And then everybody's all excited. You start to see all these articles about the top is in, blah, blah, blah. And you see that we have a left shoulder, head to neckline, and we start to see this little, dead cat bounce to possibly form a right shoulder. Now look, I would start looking for highs on that right shoulder, and I would certainly start looking to trade more bearish once we have confirmation below the neckline. and we can measure that. We can, have this already planned to essentially wipe away most of what we gained in 2020. But it has to break the neckline. We have to see bearishness coming in the area of a right shoulder or a neckline break, or sometimes these head and shoulders become a little bit trickier where we might see the market come all the way back up to retest the high, and we have highs right there. And then we start to notice some range bound trading. And I've already talked about that. I would not be surprised to see if the markets are struggling to make new highs in 2021 beyond, like way beyond what we did in 2020. Now, we could stretch a little bit higher. I mean, certainly the momentum that's carried over from 2020, we could stretch a little bit higher just on euphoria. We have super accommodative Fed policy and monetary policy around the world. We have no interest rates. We have money that's essentially begging and yearning to be in these equities markets to just go after some growth opportunities. We have the new rise of special purpose acquisition companies, or SPACs, which are taking companies that have basically no track record, maybe even not any revenue, and bringing them public. So it's kind of the new hip IPO. Anyway, there's a lot of fundamental reasons that I can think of where the markets may struggle, but fundamentally, in this state of possibly euphoria, in this state of just path of least resistance, accommodative monetary policy, we might see drifting markets going higher. However, all I'm saying is that going into this year, the analysis is pretty clear. I've got lots of technical reasons to see that we have a potential high in place. If I go into my subgraphs, this is why I wanted to save this. Okay, take a look at this. You notice how we have higher highs in price, easily to discern lower highs in momentum. Now, we're not overbought on the weekly chart, but if we go into the daily, take a look at this. Look at the daily chart on the S&P. You can see the same thing. In fact, this is pretty ridiculous. From the high of February last year to this entire run back up, we have essentially not recaptured highs on momentum. Now, we also see that we have this high, we have a higher high over here, higher high over here. You're noticing these higher highs, yes? We have some overbought conditions. Again, not recently are we getting back to overbought. So what I'm going to be looking for as far as a technical trigger would be something like this. If we see some choppiness and maybe some drifting a little bit higher, is it enough to push my indices into overbought territory? If so, I'm going to look for an aggressive trendline break and start looking for something like this. Now, we did time the markets pretty well last year. We were also very bearish going into 2020, and it paid out very nicely that first quarter when everything, of course, went into that COVID spiral, like I said earlier. So look, if we have a nice little trendline break and we start to see some bearishness, I will be rapidly looking to buy the VIX. I will be looking to trade call options on volatility. I will be looking to potentially buy some inverse ETFs to take the timing of this and go after this low in September and go after this yearly pivot. It lines up actually very nicely across the board with the S&P 500. You can look at the SPY and see the same thing. Okay, so there's your lows from September, yearly pivot, previous high from February. This area is where I'd like to see a little bit of a correction take place. The Dow Jones, here we are at 30,182, previous high, lows in September, yearly pivot. See the common thread? How about the NASDAQ or the QQQ? Now, this one doesn't have the same structure from February because the NASDAQ ended up rallying, 60+% to get to a 44% performance on the year. But look at the highs and lows from September. This high in September, this low in September translates nicely into a correction point for this yearly pivot. That's around 264. Let's just call it 265 on the QQQ. You can look at the NASDAQ, which is trading at 12,814. Same thing. September high, September low, yearly pivot around 10,800. Okay. So what is it going to take for me to start getting bearish on the stock market? I'll talk about this for the first couple of weeks in my Flex trading room. This is going to be kind of my Q1 outlook. What could be the trigger? Like I said, maybe Biden's presidency. And again, it's not that it should happen because of that, but it's the catalyst that the news and the markets may use to start throwing a little bit of profit taking out there, to start throwing a little bit of uncertainty in the markets. The bad part right now is we don't have really healthy bearish cycles, right? We have these extreme highs followed by very quick rapid corrections. You just think about 2020 with basically had about a 1 to 2 week window to really start buying in March. If you wanted like the best prices, unless you had some technical double bottoms on a couple of stocks, which we were able to find, for the most part, there are a lot of stocks out there that literally had V bottoms, as in the letter V, and it never came back to test that low. All right. And then from there, these stocks all over the place proceeded to create the bottom, push all the way back up into those January, February highs if they were at those highs, and many even proceeded to new highs, which is insane, but that's what 2020 was. Okay, all of it was insane. So, see what I'm saying? Like the technical outlook to me is I think a healthy correction is needed. I don't know if we're going to have a healthy correction per se as far as how it plays out. It might be a fast, violent, scary correction. I don't know, but I want to be ready for that. So I will be watching some price action for the first, heavily the first quarter. But I think that it would make sense to me, given what we had for this insane rise and meteoric rise of just everything growing in 2020, to see at least some type of reality, maybe a bit of a slowdown in 2021, and we can't sustain this trajectory. We can't sustain this velocity that stocks and indices have been traveling. Now, granted, there is the environment, right? The environment has been very conducive for just dumping money into stocks and just watching these highs. But when we're seeing new historical highs with the stretching of now a 12-year bull run, and you're looking at things like Bitcoin that just exploded through 20,000, which was the 2018 high. So here is the weekly chart, just blowing through that 20,000 barrier. I'm already starting to see, this is a weekly chart, by the way. Look at the weekly chart relative strength. That is the most, back to where we had levels in 2017 and 18, it is overbought. And to just take a closer look at the technicals, let's go down to the daily chart here. Again, overbought conditions right here, way overbought on the daily chart. You don't see the obvious disagreement in price, but we are noticing that it is stretched away from a lot of pivots. We have a monthly pivot there. We have a monthly pivot there. We have a yearly pivot here. We have weekly pivots that have missed along the way as well. Just for a balancing point, it would not surprise me to see Bitcoin from, the 30, again, call it an arbitrary number, but let's just say $30,000. We had 35 highs. Do we come back in and retest? Look at where this yearly pivot sits, 20,000. Technically speaking, would it make sense to have a $20,000 retest, because that was the previous high from 2018, right? We could see some, again, high volatility. We could see this drop down to 20,000. It looks like an incredible amount of volatility, but there could also be a buying opportunity in cryptos again this year. So from this meteoric run on all instruments, or a lot of instruments in 2020, we actually have some really nice pivot levels that I'd like to see some of these trends continue. So if we're going to see, again, added legitimacy, more money going into cryptocurrencies, bring it on. So let's see if we get some healthy corrections first. I have not added to anything Bitcoin since my lows around 5,000. I've basically just kind of accumulated my position between 5,000, 4,500, 4,000, and that was kind of it. I've just been basically holding Bitcoin and other cryptos. But once we started to see a nice little bull trend appearing in Bitcoin and running through 20, I've just been hanging on to it. So really happy to see where it's at overall. This has been a huge run. I'm up over about 640% right now in my overall crypto portfolio, and Bitcoin has led the way. Yes, I would be up a lot more than that if Ripple didn't take a huge turn with the SEC probe. However, I'm going to talk about that too. So Ethereum, another nice one that has run crazy high. We have tested 1166 was the high. That's not quite back to the 1400 highs from 2018, but very close to it. So again, do we start to see, let's say we have our little rally here. Do we pull back and find some pivots? Do we see that as a buying opportunity for Ethereum to head back up and retest these 2018 highs and go beyond? I certainly hope so. If this is considered a swing, do we have a pullback to form higher lows and then just simply push into higher highs? Let's get it. But in the near term right now, look at the technicals. We are overbought. Okay, this is on a weekly chart. Let's go down to a daily chart. I would be almost certain we are overbought. Yes, we are. Okay, so daily chart, we are overbought. I get it. We have some pivots lined up. It would make sense to see a bit of profit taking, a bit of a correction. But the question is will that correction be a buying opportunity. And if we're going to sustain these trends, they have to be buying opportunities. If we have a bullish trend that is going to continue, these dips and pullbacks are going to be buying opportunities for new trends. Okay, so it makes me think about, do I take some profit on Ethereum right now? Not necessarily. I mean, I want to. Maybe I want to take some profit, partial profits, but where do I buy it? If my base position on Ethereum is $200, which it's very close to that because I was in here at the lows around 250 to 200 to even $150. For me to get Ethereum and say, okay, I'm going to take some money off the table and watch this thing dip around $800 or even to the yearly pivot around $500, and I'm going to buy more of that. Truthfully, I'd rather just hang on to it at $250. So, maybe that's wrong. I mean, maybe the outlook is we score a point and cryptocurrencies have a very difficult 2021 and it wipes away all of this. I don't know. And that's a risk that I'm going to have to figure out. Am I going to let all the profits go away, or I'm going to sit and hold and have a long-term outlook and think that if cryptocurrencies are the real deal, we're starting to see obviously a lot of interest. Ethereum's had a fantastic run here the last 2 to 3 weeks, especially during the holidays. Bitcoin's been leading the charge the entire time. It's nice to see these other ones catch up. I said Ripple. I want to talk about Ripple for a second. Obviously, they have had an incredible setback, which is really disappointing. So here's what I did. Ripple is actually one of my larger positions that I had in my crypto portfolio. My base was right at 20 cents. When this thing shot up towards 80 cents, I was super happy. Now, it has since set all the way back in. We had some lows around 16 cents. So it actually came back below my break even. But what I did here, when we had this little run, I did take about half of my position off the table with Ripple, and I diversified. One of the traders in my trading room has been big into Chainlink, and so I wanted to just take part of the profits that I've had some Ripple, and I was also noticing that there's going to be a discontinued trading on Coinbase. You can still own and hold Ripple on Coinbase and most of your other digital wallets out there. And this really is an effect for US traders. The SEC probe is going to affect US investors. So what I thought was this. I still wonder and think that perhaps Ripple is going to be okay. Maybe it's a healthy fine. It's a financial slap on the wrist, like a lot of things are in the financial world. But do they figure it out? Do they make good on it? Is it an overreaction? And if so, does Ripple get back to 70, 80 cents in the next 1 to 2 years? Maybe. Does it never recover? I don't know. So I'm going to leave a little bit of a stake in Ripple. It's certainly reduced, but I have essentially no risks on the table. I've taken enough profit out of it. I've diversified into another cryptocurrency with Chainlink, and I am curious to see what happens next. So at first I was going to say, okay, no more Ripple. But then I thought, what would really aggravate me is if, as a US trader, you feel like you're going to be bullied out of Ripple, and internationally, people hold Ripple. This doesn't affect them. And yes, it's a volatile price action move. But if we see Ripple again go back to $1 or ever get back to these highs from 2018 at $3, I will be furious that I'm not holding something with Ripple. So that's my 2 cents on it. I want to see if we can go to revisit these 2018 highs. Promising move, squashed by the SEC. But I'm going to hold a little bit of Ripple. I did diversify into, like I said, Chainlink. That's Link USD. And here is the Coinbase feed for that. And that is up around, is $13.56. I was in this back around $10. I got a really decent price on this actually. About the time that I saw Ripple dropping, I was evaluating the price on Link. I do have some chart alarms set here between $8 and $5. And so part of that was I'm just going to take a small position here on Link. And that was just the timing of me taking some partial profits in Ripple. And if it comes back into $8 or $5, that's going to be either another level and or another level. So between 2 to 3 levels, I will get into Link US dollar. I'll keep a little bit of that diversification alive. So my portfolio holdings for cryptos involve the following. I have Bitcoin, the primary. I have Litecoin. I have Ethereum. I have some Ripple, even though that was formerly my largest holding in cryptos, and that's been diversified with some partial profits. And now I am adding Link to the equation. So that's it. I haven't really experimented much outside of those. I know that there are some other, altcoins and coins that I'm kind of interested in. I'm following them. One that was kind of correlated with Ripple is Stellar. I know there's some other ones, but this is my personal crypto portfolio. It's nothing fascinating. It's not a secret. I'm pretty much just kind of getting into what I think are supposed to be the kind of liquid and active currencies out there, or active cryptocurrencies. So that's my portfolio, and I'm gonna basically be a buyer and holder, and kind of take out the popcorn and see what happens in 2021. Can we see some new highs? Can we keep this trend running? Will we see those pivots and technical corrections for a much needed technical pullback? Will that be a buying opportunity to buy the dip? Or is it a bubble? That's the one thing we have to also look at is it a bubble? Will we see actual tops in the stock market? Will we see some bearish price action that's going to be the dominant force? Or is it just a correction that is, right at this point, it is sorely needed? Okay, so we've covered US indices with those alignments, yearly pivots, previous highs from February, decent structure in the market, really good technicals on those yearly pivots. I think we're going to find a way to hit them this year, but will we see a buying opportunity? We will be following those very closely in the trading room this year. I'll talk about that this week in my Flex trading room as well. Cryptocurrencies we're good on. So Bitcoin, 34,000 plus, amazing run, blowing through 20,000. If we pull back, that yearly pivot is sitting at 20,000. Technically speaking, past resistance become future support. Let's see if it holds. It'll be really interesting to see if Bitcoin will start making that incredible run to, do we get to 40,000? Do we get to 50,000? Do we hit 100,000? I don't know. Of course, that's what we're kind of hoping to see as a, if you're a cryptocurrency enthusiast, then you want to see, Bitcoin and the likes of all the other currencies go as high as possible. When it comes to the dollar index, let's talk about some Forex. Really good technical patterns. Again, yearly pivot. Wait for a trend line to break. I think if you just simply waited for something like this on the dollar index, you have oversold conditions, divergence, all setting up right here. Lots of targets and pivots that have been missed along the way. You have monthly target or pivot, monthly pivot, multiple weeklies, and a yearly. Look, I'm not calling the bottom, but I would say that it would make sense once we get on the right-hand side of this trend line to start noticing that a price pattern will emerge and start to allow the dollar to recover. Now, that recovery could come back into these lows. That recovery can come back into this previous high, which happens to be right at the yearly pivot. But I am looking for some dollar strength. Now, it would make sense that also a sell-off in the stock market would start to yield and correlate with some dollar strength. Okay. Look, I think that the Fed is not going to change their tone if Biden is president and Yellen steps in as the new Fed chair. We have seen her already be super dovish during the Obama administration, so I don't anticipate the Fed changing its tone or tune anytime soon, except for when the economy looks better. And if the economy looks better, we have to have way better employment numbers. We have to have way better revenues. We have to have a better landscape where businesses are recovering and they can, realistically say that it is a fair and equitable recovery as opposed to what we witnessed in 2020, which was the K-shaped recovery. But technically speaking, dollar index, oversold conditions, really nice divergence. Once we get on the right-hand side of the trend line, pivots galore. Let's see if we can plan out a nice little price pattern and have the dollar index start showing some signs of life. If so, that means that the euro dollar is going to start to drop. It would make sense that this starts to drop. I wouldn't ask for this to do a ton, but even if we pulled back into previous highs right there, I would short this to there. Yes, there's a yearly pivot, there's previous levels, but it's really simple. An aggressive trend line, wait for the dollar to break, look left on the chart, previous high becomes resistance, becomes future support if the trend's going to continue. That's okay. But we should start noticing some dollar strength in the near term. Okay, and that move right there is around 270 pips. Okay, the dollar index would be several hundred points. The Aussie dollar is another one. Look left on your chart, previous highs. If we start to break this trend line, I did short this one already around 77.15, which is a pretty solid entry. So there's a previous high around 74.20. There's a monthly pivot. There's a monthly pivot. There's a yearly pivot. We have previous lows. This looks an awful lot like the stock market, doesn't it? Right? We had this, COVID spiral, risk off trading, and then we had risk on trading. This looks almost like the NASDAQ, where we took out these highs and we've gone to these crazy high levels. The Aussie is really overstretched, right? We're overbought, divergence. You can see that right here. Lots of targets and pivots have been missed. So in the near term, I could see some dollar strength really lining up. Look, I'm not trading it very large. I'm already short on the Aussie dollar. I'm willing to look at this from a higher time frame. So I'm essentially saying this. If I'm going to short the Aussie dollar now, I also have to be willing to say, you know what? This isn't the top. This may drift a little bit higher. And if it drifts a little bit higher, I would look as high as 8,000. And from 8,000, then we start to look at the same levels of resistance becoming support and pivots for the correction. So I'm trading this, you know, now, but I'm trading it with a trade size that if it runs a little bit higher, I'm okay with that. And I'm going to look at this kind of, 300 pip area as where I would expect to see some highs to form. And then we start to see the healthy corrections and the efficiencies of the Forex market. So I'm looking for some highs and lows to form on dollar pairs. I think that's a really nice trade to start out Q1 and hopefully kick off the first quarter with a nice little bang of profits and go from there. So, for the sake of time, I know we covered a lot of stuff today in the weekly outlook, but we have a lot to discuss this week in the trading room. Look, it's a clean slate for 2021. I'm really excited. It was awesome to have the time off. It was just nice to take a breath. But overall, 2020 was a great year as far as investing and trading. Socially, it was a horrible year for most people, and I empathize. But let's, again, I'm not saying that 2021 is like a clean slate on everything. Clearly, there's going to be some aftermath. There's going to be some, there's going to be some continuation from what we experienced in 2020. It's not going to change with just a calendar day. Like first day of trading, 2021, new year. Look, there are things that are going to carry over, and we will get through it. It's going to be a grind, but like I said, do the best you can. Set realistic expectations, and let's trade to be profitable, not perfect. All right. So I'm liking the setups right now. Expect to see some corrections coming in the stock world. Expect to see some profit taking in stocks, profit taking in volatility in cryptocurrencies. I like to see the dollar recovery here for Q1, and we'll go from there. All right, everybody, that's going to officially take care of this week's Outlook. Thanks for being with me. I'll see all my traders out there in the trading room. We'll start tomorrow morning. Back to business and back to the grind as usual. Have a great week, everybody. Talk to you all soon. I appreciate the thumbs up and likes and comments in this video. So make sure you subscribe to the channel, click the notification bell so my weekly Outlooks and my Keep It Seriously Simple video series, when they go live and premiere, you will see them. Okay, happy trading. Lots of profits, everybody. Talk to you soon. Bye.